because you repatriated it here, you spent it, whatever you did, you're going to pay 5% on the year-end balance. So that was a bonanza for a lot of people, because 5% obviously is much better than 27.5%. And there was a mechanism where that could be ratcheted up to 50%. So people were jumping on it. I was getting called, wow, what am I doing? Why am I doing 50% and 27.5% when I should be doing 5%? The difference was you had to sign a certification that you did nothing wrong. So you had to explain, there's a form that's out there that takes you through it. And you had to sign a certification that you did nothing wrong, this is what happened. I really did nothing wrong. I didn't know, my accountant didn't tell me, I wasn't trying to defraud the government, and then the penalty is 5%. Now, the penalty was 5% subject to audit if they decided to audit the return. And the trick was when they did the July 1st program in 14, once you went into the streamline, if it turned out you made the wrong decision and should have gone into the full program, you couldn't go that way. You couldn't get out of it. So once you're in the streamline, you're in the streamline. And vice versa, if you went into the program, you couldn't go back into the streamline if you decided you weren't a person that needed the full-blown protection of the program. Okay, so that's essentially what happened in July. Now, the service, when they came out with the July program, also said they published a list. The Treasury Department published a list. The IRS published a list. It's actually on their website. And what it is it was a bad bank list or a person who enabled people to get an advisor list. So if you were in, say, Credit Suisse or UBS, two of the biggest egregious performers under this, if you were in that program, if you were in UBS, the amount ratcheted up to 50% of the high balance. It didn't say 27.5, because that was a bad bank. And there's actually a list. As I said, the website has 100+ names of banks and individuals that was on that bad bank list. That's what happened. So that's what happened with the streamline. Now, there were other pathways that got created to help people. It wasn't just a streamline. There were pathways below that. So if you didn't file an FBAR because you didn't know, they came out with a pathway where you could just file delinquent FBARs with no penalties. If you didn't file the 8938 and 5471, those international information forms, there was a pathway created for that, where you could just amend the returns and amend and put those forms into the system, and there was no penalties for that on bank balances. You had to write reasonable cause statements and so on and so forth, but there was no penalty for that stuff. So this is all going on over the last 10 years. Now, what happens now is, back in the early part of 2018, the service decided that they were going to end the program for the full-blown protection. So this is not the streamline, that's not the delinquent returns, not the delinquent FBARs, but the full program for people who were scared of prosecution. They announced in early 18 that on September 28th of this year, of last year I should say, 18, the program was ended. And the reason they did that was they kept saying, if people haven't come in 10 years, they're never coming in. Also, the physical number of full-blown OVDI program cases they were getting was dwindling tremendously. The program was a huge success. They had over 55,000 people come in under the full-blown program. They collected over $10 billion or thereabouts. So the program itself was a huge moneymaker for the government. It also gets people in the system, because once you start filing the FBARs, you continue to file the FBARs. The word got out, the accountants know about it now. Right? Accountants know about this stuff. I don't get any accountants now telling me they never heard of the form. Streamlined also collected approximately 50,000 people and made about $450 million, the last stats I saw. So the streamline was very popular and got a lot of people into the system. Okay. Now the program ends. So September 28th, the program ends. So what happens if you get somebody comes to you, gee, I didn't go in, I'm scared. Well, the service came out with a map when they closed the streamline, when they closed the full-blown program down. They told practititioners, we're going to give guidance to the operating divisions of the IRS and people, you know, representatives such as yourself and me, what you can do. What can you do? And they issued a memo to the operating division, which now says in very broad parameters, because they're going to have to issue more advice on this stuff, but in very broad parameters, what they're saying now is, it's not the kind and gentle IRS anymore for people who need this stuff. What they're now saying is, there's going to be and again, there's going to need a lot of guidance, because the operating division memo, like I put out, is very broad. But in essence, it's going to be 6 years, or a shorter period if you're only doing this for 4 years, say. They're now saying instead of a 20% accuracy penalty, at least 1 year is going to be a 75% civil fraud penalty. What's going to happen in those other 5 years, we don't know. We just don't know. They've given broad discretion, apparently, to the revenue agents who get this stuff for review to increase the fraud penalty to other years if they don't get cooperation. They want you to settle with the revenue agents. They don't want to fight. They've given very broad discretion. Now, we don't know what that means. Okay? Also, when you have a mandatory 1 year civil fraud penalty, 75% of the tax, no one knows what the other 5 years are. Is it going to be an accuracy penalty? No one knows. There's going to be a 50% FBAR penalty on the high balance. But again, nobody knows, because there are informational penalties. Okay, so if you don't file, say, if you don't file the 8938, which is the tracking of the FBAR essentially, there are penalties, $10,000 penalties. And for all these forms, these informational forms that don't get filed, there are penalties. There's no guidance as to what they're going to do with this, because under the full-blown program as we had known it, it was that one-time penalty, the high balance, and the accuracy-related penalty, and all the informational form penalties were waived. So there was actually a cap. When clients came in to see me, I could basically tell them the exact number they'd have to fork over. No one knows right now what this program is going to mean. Also, the way you do it now is going to change. What used to happen was you had to pre-clear. Well, you didn't have to. You could do it optionally, but 99.9% of the people pre-cleared, which meant that you sent the memo on a particular way to IRS Criminal Investigation in Philadelphia. You gave your client's name, social security number, date of birth, address, and some bank account information. And CID took that and they ran a database search, which meant that you couldn't come into the program, again, this is the full-blown program, if there was a criminal proceeding going on or the IRS knew your name. That's why they ran the database. And 99% of the people that we saw, we had some people rejected because the IRS had already known about them. So you couldn't go in the program once they knew about you. That was always the trigger. They know about you, you can't go in. And about a month later, sometimes earlier, sometimes a little later, we get back a fax from IRS Criminal Investigation that said, okay, we ran the database, you're free to do the step 2 of this, which is to get preliminary acceptance into the program. Preliminary acceptance into the program meant you had to fill out another form, another IRS form, with more detailed information. Now you were revealing sizes of approximate sizes of the bank account, approximate amounts of tax that would be due, and other information. Who enabled you? Did you talk to a CPA? Did you talk to a lawyer? Who told you to do this? And the service was basically mining that information, because if they saw the same advisor on all of these 55,000 forms that were coming in, they might take a look at them and prosecute them. And that was step 2. If you went through all of that, the service agreed, you dotted your I's and crossed your T's, you got to the 3rd step, which was the submission of the physical returns with the checks to the IRS Service Center in Austin. There was a unit set up there to receive all of this. And this, again, is the full-blown program. This is the one where your client's a bad person who needs physical protection from prosecution. And it went out to the service center in Austin, then it got assigned to somewhere around the country. They had groups set up around the country to do audits, and they were called certification audits. So they were not full-blown audits. They were just tick and tie audits. Some of them were more detailed than others. Some of them, there were no real audit anyway. It just was looked at to see if it made sense. If it made sense, you then got a closing agreement, Form 906 with the IRS, that said your case is over for the the amount of money you paid. And that was the end. Your client went on his way. You probably had to do some sort of state disclosure. New York had a voluntary disclosure, as did New Jersey, that hooked on to the IRS, where the IRS did the heavy lifting, and they got the checks. But that's what happened. And that's exactly what happened with this program. The program's now ended. It's now ended. I should tell you that it's very interesting. When UBS caved, they agreed. They initially sent over about 250 names, unbeknownst to a lot of people. We actually picked up. Could you please turn the phone off?
You know what this could be?
It's very rude, Professor.
I apologize. I thought this was our pizza, but it's not our pizza.
So anyway, to make a long story short, UBS turned over about 250 names initially. No one knew. We actually picked up one of these people that UBS turned the name over. The client never knew. Okay, so when you got picked up that way, the IRS did what's called an audit from hell. And there were indications. So if you got a contact, say, from a Florida agent, and you were here in New Jersey, the accountant should have, the lights have got to go off on the accountant. What's going on here? This is unusual. And I'm going to talk about how you protect your clients from these types of audits in a minute. And again, as I said, this is an hour and a half or whatever for a 2-credit course. But he got picked up. Okay, so the service starts to play gotcha with these people. It wasn't just my client, but the whole slew of people. So you could walk in, you're an accountant, you have no clue, the client, because he never told you. You have no clue he had a UBS account. Why would he tell you? Because he's hiding the money. So, client gets called for an audit. This is a lot of people. I've heard this story from a lot of people. Client gets called for an audit. The agent says at the end of the audit, is this all of it? You as the accountant don't know. You say, sure, that's all I knew about, right? That's a problem. And this went on. So now you have UBS and all these banks turning over names now. This is the banking world. When Birkenfeld did what he did, I'll add this piece to the story because I said it's more complicated than this, but this is the second piece to the story. When Birkenfeld did what he did, and the IRS, when the Department of Justice was breaking down the Swiss banking laws, they issued what was called the John Doe summons. Okay? The reason they were able to do it, you anyone know what a John Doe summons is, by the way? I shouldn't go so quick. I used to do it with the IRS. A John Doe summons is just we don't know the name of the person we want the records for. So the John Doe summons just says, basically, tell me all the Americans who have accounts in Switzerland. You think when that hit the papers, people were running in here because they were all scared. That's a John Doe summons. And they were able to do it basically because UBS had purchased Payne Webber, so they had a U.S. presence here. I had clients, I'm telling you, UBS, when they got kicked out because UBS didn't want them anymore, they kicked them out. They all got letters saying, you got to get out of here. Because they were scared of the Department of Justice in 2009. So these letters came flying out to all their American customers. But I had clients come into my office who literally said, and it's God's honest truth, I went to Switzerland to get my money. The banker said, we don't have, we have a U.S. presence, don't worry about it. I'm going to take you across the street to a local bank with no U.S. presence. Put your money there. That's a no-no. But that's what happened to a lot of people. Okay? So nobody knows really where this, because the IRS is going to have to issue new forms, how you're going to pre-clear, what's going to be on that pre-clearance for, how you're going to do a preliminary acceptance. No one really knows at this point until the forms come out. I don't recognize professors.
Let me just pause because, I know people are somewhat bashful here. So I just want to make sure everyone understands the context in which Bob is referring, because there's going to be clients who come into your life who wittingly or unwittingly have not reported income. And it may not be overseas. It may be And Bob, is it fair to say that there are domestic programs as well?
There's a domestic program, there's a counterpart to this. So what happens, that's a very good point. There's a domestic counterpart to this with the IRS, where if you have unreported income, U.S. source, so we're not overseas now, just, I didn't report for my business there. There's a counterpart to this where you can actually go in and do the same thing and get, again for a price, but you can actually get a physical agreement from the service in this closing agreement, not the prosecutor.
And it's fair to say that it's not like people discover religion. Often there's a triggering event. So all of a sudden you're going to maybe seek a divorce. And all of a sudden you realize your spouse has information that probably you don't want to come to light. So you want to make sure you run and call someone like Bob or someone like that and make sure you get this done before that divorce unfolds.
Best segue I ever had.
Okay.
So, just to jump off topic, because your professor raised it, there's a case out of Western Jersey called Sheridan v. Sheridan. Anyone know it? Anyone ever hear of it? Great case for CPAs to know. Terrific case. So it comes out, it went out about 30 years ago, 25, 30 years ago. So here's the case. What happens in a divorce? Everybody hates everybody, right? And it's not usually amicable. It can be, but it's not usually amicable. So, you have this guy was an oil delivery guy. And what he was essentially doing was you pay for 100 gallons of oil and he put 98 in your house and then he goes sell the other 2 gallons. So he was accumulating a lot of cash over the years. It's a Jersey divorce case. He's accumulating a lot of cash. And he's paying for everything in cash because how do you get rid of the cash? You gotta pay for everything in cash. So the house was, was nice, the vacations were nice, the trips were nice, kids were going to private school, that kind of stuff. Only problem is the marriage starts to break down. And we see this a lot of times in my office. These cases still go on. And the marriage is breaking down. And they're getting divorced. Everyone knows in a divorce action, you got to do a case information statement as an attachment to the papers. So essentially what you have to do in a divorce is the husband has to divulge all of his assets. Wife's got to divulge all of her assets on these case information statements, which are the penalties of perjury. So the case is going to trial, right? And what's coming out on the record? The wife turns around and says, wait a minute. That's all nice, but what about the shoebox? And what about what's in the wall, and the safe, and all of this stuff? And you're not making $200 a week because you're making a lot more than that. And the judge is listening to all of this. So you got a chancery judge in New Jersey listening to essentially what amounts to tax fraud on the record. And what is on the record means? It means everybody's testifying under penalties of perjury. So if you're an IRS lawyer and you get that transcript, you know how bad that is? Because you sworn under penalties of perjury, certain things happened or didn't happen. And the judge is listening to all this. So what does the judge do? I'm just going to read you a couple of excerpts from the case, since your professor brought it up. So, here's an excerpt from the findings of fact. From a safety deposit box, a shoe box, a dog biscuit box, and from other hiding places, more cash withdrawals followed. Occasionally, they even withdrew funds from a checking or savings account, those withdrawals being primarily in cash. Funds were expended for remodeling, decorating, furniture, appliances, vehicles, vacations, jewelry, gifts for family and others, and a 6.5 acre parcel of land in Chester County, Pennsylvania, including private school tuitions. The family budget for the years easily exceeded this, big amount for that time. This is all coming out on the record. So what does the judge do? And it was very nice to the judge because, this was a boon for, lawyers who practice in this area. This is great. This is great. So here's the conclusion of the court. Let me just pull it up. So the judge says at the end of his opinion, I'm reading from the opinion, so I'm not making this stuff up. Accordingly, it is the holding of the court that where evidence establishes an intentional underreporting of income, in this case large sums from a legal enterprise, it is a judge's duty to report such wrongdoing to the appropriate authorities. Who are the appropriate authorities? The IRS, and also the state of New Jersey. So, that being said, to this day, we still see these cases. And what you're gonna find, I think, is you do these, because the accountants do the case information statements. I think what you're gonna find is that judges will use sharing as a mechanism for trying to settle cases, because I've been involved, and I know of my friends who've been involved, of many instances where the judge will say to the lawyers, guys, you might want to go in that room and think about it. Because if we go any further, have you guys heard of Sheridan? Okay? True story now, I'm going to tell you one more true story. I'm in a conference with a client, and I'm in the conference room, and my secretary knocks on the door, and she says to me, Bob, you know, this particular judge is on the phone, wants to talk to you. So of course he's a judge, you know, and so you say, you know, to the client, they're glad we have to take this call, and you walk out. And the judge gets on the phone, and he says, Bob, he says, I have this case going on, I stopped the trial to call you. And this is what's coming out on the record. You're a former IRS lawyer. What point do I have to stop the trial and make a referral? True story. Judges do make referrals off of this stuff. Okay? But again, rationality is not always in play when people hate each other. A lot of times people say, I don't care what court, but the family unit is going to be a lot poorer. Okay? Because once you get the IRS involved, they're kind of akin it to, you know, a tiger. Once you let the, you know, you want the tiger to bite him or her, but once you let the tiger out of the cage, the tiger bites who it wants to bite. And it's the same idea. You can't control what happens once this gets outside. Okay? Other contexts you'll see this, divisive shareholder actions. We used to think about sending in IRS agents into divorce trials and divisive shareholder actions. Because again, you know, when you get partner against partner or brother against uncle, whatever it is, there's a lot of stuff that comes out on the record that is indications of tax fraud, right? Cash, you know, this kind of stuff. Those are Sheridan issues. You really got to consider it and advise your clients, you know, in these cases. You got to advise your clients. But these things do happen. It's an interesting segue. Anyone know how IRS cases get started? I always get these questions from CPAs when I do the CPA Society lectures. There's a lot of ways IRS cases get started, okay? And there's a lot of different people that work for the IRS that you got to know about. Have to know about these people. In your practice, when you're CPAs, you're basically going to see three kinds of people, okay? You're going to see a revenue officer, a revenue agent, and sometimes a special agent, although a lot rarer. And who these people are and when they come into the case is critical for you protecting your client. Absolutely critical. Okay, because you are the eyes and the ears for your clients. Your clients are stupid. A lot of them are dumb. And you're not going to believe this, but I'm going to tell you as a fact, having done this for many years. Clients do not always tell the truth. I know that's hard to believe, but they don't tell the truth to me, they don't tell the truth to you. Ronald Reagan used to say, and I live by it, trust but verify. There's a lot of truth to that, especially for you as CPAs, because you're the front line in this stuff, okay? A revenue officer, an IRS revenue officer, is essentially the private debt collector of the IRS. They're the people when you don't pay your tax, either you don't pay with the return, and there's an audit, and there's an additional assessment that's not paid. They're the people that go out and will leave a card with your client. They'll show up at the office, they may do it by mail, there's a lot of ways they can do this. But they're the private debt collectors of the IRS. That's their real vocation. They go out and collect the taxes. Now, they have other functions. They will solicit when a case doesn't go criminal, and solicit's the wrong word. They will get people who haven't filed returns when the case is not criminal. Because if you don't file returns, that's a misdemeanor in the Internal Revenue Code. So if it's not going criminal, they're the people who try and get you to file the returns. They have other functions now, because over the years they've got burdened, but essentially they're the private debt collectors of the IRS. Okay? There's a second person, that's the revenue agent. Revenue agent is the better educated individuals at the IRS. Some are CPAs, some are not, but some are. they're better trained, and they're the people that do the audits. And the client will get a contact letter, and the letter will say, you know, we're meeting in 2 weeks, have the following books and records available for my inspection, and the client's gonna call you. That's a revenue agent. Not all revenue agents are the same. Please keep that in mind, okay? There is a group in Springfield, New Jersey. They're called SEP agents, Special Enforcement Program. Their cards read like regular revenue agents. If you draw a SEP agent, I should say if your client draws a SEP agent, for any reason, there's an indication of something's going on, because those are the people that are trained to assist the U.S. Attorney's Office in prosecutions. And if they're on the scene, the IRS knows something. There's some suspicion that something is wrong. Now the question is, how do you know if they're a SEP agent or not? One way is you talk to your friends who deal with these people, you know, other people who do audits. You can talk to me, you can talk to the lawyers who do it. You can ask them. They're not gonna lie to you. Are you from a SEP group? I've done it before, coming from a SEP group. Those people, those audits are sensitive, very, very sensitive, okay? And they have to be dealt with in a particular way, because you are the accountants. You're the eyes and ears of the client. If you misjudge at the start, you put your client in jail, or could put your client in jail. And I'll tell you, as an IRS lawyer, more than talking to the client, I used to love to get to talk to the CPA first, because the CPA is the independent witness. Everything the client says is self-serving, but the CPA, you guys, are the people I wanted most to speak with. So I get an affidavit out of you. Again, I'm casting myself as an IRS lawyer. If I get an affidavit out of you, the client never told me about the Bank of America account. The client never told me about the Smith Barney, you know, investment account. That's pretty darn good. That's how you build prima facie cases.
Bob, can I interject that?
No, you can't.
I need to for
You're
the classes.
interrupting my lecture here.
I gotta make it easy so you can take a breath. So if these guys, someone in the room, their client is under audit and the IRS attorney comes to ask questions, should they have counsel with them before they start responding?
Well, again, the IRS attorney is not showing up first. We would show up, or I would have shown up.
I guess my point is, at what point should people in this room, you know, getting legal counsel means they may have to contact their malpractice carrier, or they may have to reach into their own pocket. So they're not running, no offense to you, they're not going to run to call you, but at what point do you think they'd be foolish not to have counsel?
Okay, jumping ahead of me a little bit, but I'll go right to that. I'll go right to that point. Let me just say that the third, I'll get to that because that's part of what I was getting to.
Okay, I'm sorry.
But that's a good question. Please ask questions if you don't know, because I can't speak for 2 hours. I just can't do it anymore. When I was 30, I could do it, but I've hit that age where I don't want to do it anymore.
Can I make one other thing to help you catch your breath?
No.
I've been doing some research for this paper I'm writing, and Bob, you talk about traditional ways the IRS may get wind that someone has committed something criminal or committed a civil issue. And traditionally, there's something called a DIF score that they measure. All right, there's all these traditional methods, but my understanding is that at the IRS now, there's a new unit devoted entirely to social media.
We're going to get to all of that.
All right, I didn't know, so I just want to wet people's whistle here that be careful what you post on Facebook and things like that.
And there's a good reason for that. Third person you may see, but much more rarely, is an IRS special agent. An IRS special agent is the criminal investigator. They come with a gold badge, usually with a gun. They're criminal enforcement, and they always show up in pairs. And not only do they only show up in pairs, they're going to show up at the worst opportune time for your clients. Your client's going out the door at 6 o'clock to go to work. 2 guys are going to meet him in his driveway because they want to catch you off guard, or they want to catch him off guard. He's coming home from work, dead tired at 8:30 at night. Guess who's going to show up in the driveway? We just want to ask a couple of questions. When I was with the government, we used to think that half the cases could not be made if people just shut up and not said, you know, but few people think to say, you know, well, just give me your card, my lawyer will call you in a couple of days. That's really, you know, people don't think that way. And people like this that tend to get the prosecutions, who tend to get the investigations, always think they're smarter than the next person. So a typical call I will get is the following. Bob, 2 special agents showed up at my doorstep today, and you know, I spoke to them, and I didn't tell them anything, but I wanted to check in with you and maybe come in and see you and talk to you a little bit. And I'd say to them, well, it's good you did. Well, how long did you talk to them for? Oh, 2 hours. You know, and these people like that always think they're smarter than the next person. And I got to tell you, there's only 2 things that can happen in that case. Where a taxpayer, one of your clients, talks to a special agent, and both are very bad. One is they lie. Bad, on so many levels, it's so many different felonies. And the other is they tell the truth, which also could be an admission of a felony. So I'm going to read you a little blurb from the district court opinion about a special agent. And this is a judge writing this, not me. This gentleman is a GS-12 special agent in the Internal Revenue Service. His function, again, this I'm reading from the opinion, I'm not making it up. His function was to investigate criminal tax frauds. The special agent, and this is the guy I'm describing to you, is the unobtrusive fellow casually introduced to you midway in the audit of your income tax return as the one who is now taking over. If you grasp the significance of his title, again, special agent, you gather your wits together and rush to hire out the ablest lawyer you can obtain at any cost. You know the prison doors are yawning for your reception. That's an IRS special agent. So how do cases get started? DIF score, that's the one your professor mentioned. The service knows over the course of many years that certain types of deductions are prone to error. So when this goes into the computer and all of this is generated, they know that if you take a bad debt deduction and you're in this income category, the chances are X% that if we audit you, we're going to get X dollars back. The more of those DIF scores that kick out, the bigger the chance you're getting audited. Okay? This is all done statistically. Back when I was with the IRS, we did an Atlantic City project. Okay? This is what happens. They're in special let me just back that up a minute. So that's one way it gets started. You can get a DIF score. How about a squealer? I had a guy back when I was with the IRS over a poker game with his friends from 25 years. He started talking about the cash he gets in business. Well, one of his friends wasn't his friends. Okay, that does happen. Remember the reward? The reward for this. That does happen. How about a rollover? Rollover means that your delivery guy is under audit, and the invoices don't match up, and he says to the agent, the revenue agent, I always pay my customers in cash. And they roll over on you. So the audit goes from one guy to the next guy. That's another way. The IRS does special projects, tax shelters, things like that, check cashes, those are special projects. They used to do industry-wide audits, those are special audits. The biggest case I ever handled that the IRS started, you know how it started? It started from a magazine article. Some higher up in Washington read a magazine article in Forbes. Wait a minute, he says, and he started a whole investigation off of it, which wound up on my desk. So that does happen. It does happen.
Right now that everything scam is going on, right? If the person is telling that I'm the IRS special agent.
Yeah, that's the identity for it. The service has a lot of problems with this, with scamming. People get, especially when we were doing a lot of the OVDI cases, we had a lot of first-generation immigrant groups here that get targeted. So, for example, Newark Rod was a Portuguese group. Were getting targeted. They were getting calls, robocalls, from somebody who was identifying themselves, you know, as being from the U.S. Magistrate's office. You know, and if you don't pay $50,000, we're going to arrest you. And the groups get scared. So I would get a call first thing, oh, I got this call last night, I'm scared to death, what do I do? It's a scam.
You're still doing it.
Yeah, and they still do it, yeah, even I get those calls.
Even though the government shut down, they're still doing it.
I get those calls all the time. Not all the government is shut down, by the way, there's special, essential personnel, shall I say?
But you can't call the IRS.
It's hard to get, the groups I deal with, like the IRS lawyers, appeals, stuff like that, the agents, we're all shut down right now. I have a huge tax court trial coming up in mid-February, and tax court is closed. So I don't think the trial can happen, so I think it's gonna get postponed. But there's a lot of stuff that's closing down. So you have different ways audits get started. This is really very, very important for the CPAs. And maybe this is the crux of whatever I'm gonna say in an hour and a half, or whatever it is. Maybe this is the one point you should walk away with. Again, you are the first protection for your clients. When that client gets the audit notice, dealing with the IRS, even the state of New Jersey and New York, you're really in litigation before you start. It's an adversarial position. You're in adversarial positions the minute you get that audit notice. It's really the truth. And it is not good enough for you as CPAs, to tell the client the night before, drop off all your bank records and just show it to the agent. Because you don't know what the heck are in those bank records. You need to go through them. You need to make sure what you're seeing makes sense. Very important. Very, very important. It has to make sense. Okay? An eggshell audit is a defined term that lawyers use. What it means essentially is there's something on that return that doesn't belong, or something that should be on that return that does belong. That's an eggshell audit, and it's called eggshells because if it's handled badly and it breaks, your client could go to jail. Okay? By the way, when a client is under that kind of duress, about going to jail, what do you think they turn on first? CPAs. Absolutely.
This
That's
is, I
very
think,
rude.
this is it, this is it.
One second,
Jason.
I'll get to you in a second. Very, but think about it. When
Okay,
they think they're going to
I'll
jail,
be right there.
the first thing they say is, I told my CPA. They don't listen to me, or my CPA told me not to do it. That's what happens. So again, they will turn on you first. That being said, you have to make sure it makes sense. It has to make sense what you're looking at. If somebody's showing $20,000 of income and is living in this mansion in Alpine, New Jersey, or down at the Jersey Shore, in a $2 million mansion, that doesn't make a lot of sense. So you can't just turn records over willy-nilly without doing it, analyzing it to see that the return makes sense. You may not even have had the client. Maybe the first year you did the return for the client, or maybe you never did the return for the client. You had a new CPA on the block. But it has to make sense. Okay? It has to. And that's why I say you're the front line in this stuff. They don't call a lawyer first, they call you. Okay? I only get involved when there's a bad, I call myself a legal oncologist. If you've got cancer, you don't go to the general practitioner. Okay, that's why we call ourselves legal oncologists. But it has to make sense. I keep saying that. It's got to make sense. And the other thing you should remember is when you do audits, if you're going to do the audit, not all CPAs do audits. Clients think, well,